This video is sponsored by the award-winning Daily Market Movements trading platform. To open a live or demo account, simply visit dmmtradingplatform.com. Hello guys, Max here from Daily Market Movements. Welcome to another episode where today we are going to be analysing the Nasdaq100 futures chart. Just before I start today's video, anyone who's interested in joining my free analysis group over on Telegram, then please do not hesitate to scan this QR code on your screen. It can be extremely beneficial joining my free analysis group due to the fact I post several amounts of research just to start off the trading session. So you could easily slip this in during your morning routine when analyzing the markets and placing your trades. And as I mentioned, it's completely free of charge to join. All you have to do is go ahead and scan this QR code. But let's start here with the Nasdaq100. Nasdaq100 currently trading at around 11,270. So trading down around 0.2%. Nothing major though. Ahead of its Fed meeting, and it's quite muted. And I'm not really that surprised. Of course, this Fed meeting is going to probably have a very large impact on where this market trades next. The expected outcome is that we are going to see a 0.75 basis point hike and most likely a 0.5 basis point hike going into the December meeting next month. So I think that the risk is definitely towards the upside here. I feel like the Fed could easily strike a more dovish tone. I mentioned yesterday that the Central Bank of Canada last week come out and gave a 0.5 basis point hike versus a 0.75 basis point hike expected. And don't get me wrong, I'm not saying that there's a potential that the Fed's going to come out today and do a 0.5 basis point hike and shock everyone, because I don't think that is possible. But what I am saying is that we're already starting to see central banks around the globe crack. They're already starting to become a little bit more dovish. As well as that, we are starting to see cracks in the financial systems, so like over in the gilt market in the UK a few weeks ago. And then just to top all that off, we are in the US starting to see major liquidity issues, okay? Because of high interest rates, the loan companies, they just cannot find the liquidity to pay for these loans, etc. So we are eventually going to have to hear and see from the Fed that they are going to take their foot off the gas ever so slightly. But it's a very hard skill to have, to basically inform the markets that we are going to be strong, we are going to tackle inflation, but at the same time kind of bring it down a bit. It's kind of mixed messaging, if that makes sense. So all eyes on the Fed. One thing that I will warn, and hence why I've come out and posted a video a little bit earlier today, is because I want traders and retail traders to understand that during these Fed minutes meetings, it's of two calibers. And the first one being you get the Fed interest rate hike decision, and then 30 minutes later, it's followed by the Fed conference where Jerome Powell speaks for approximately 10 minutes and then answers questions from journalists, and that can take up to about an hour. And what you tend to see is a reaction for the interest rate hike. So, for example, if we get 75 basis points later on this evening, then I think you might see a minor little pullback in the market. And then as you go into the conference, you typically see the opposite reaction. So, for example, if we get a decline during the interest rate of the interest rate hike of 0.75 basis points, then going into the conference, I would then expect the market to actually trade into positive territory. It's kind of like a seesaw knee-jerk reaction where, whatever you do during the interest rate decision, you'll probably do the opposite as you go into the conference. So I definitely want you to all keep that in mind as we go into the rate decision later on. But just looking at the Nasdaq100 from a technical perspective, we're still trading in this uptrend. It could mean that we could fall as low as, let's say 11,100, maybe even 11,000 prior to the Fed minutes, or during or afterwards even. And, but we're still healthily trading in this uptrend, and we're about to break out this downtrend that we've been trading in since August 16th. As well as that, looking at the MACD, we're still trading in a nice uptrend here, and the MACD is about to go above that baseline of 0. And, at this moment in time, there looks to be no risk of us having that death cross here where the MACD, has that bearish cross below that signal line. So at this moment in time, the MACD is looking healthy. RSI is telling us that we're nowhere near to be overbought. We're currently trading mid-range. So I think that, considering the seasonality of this current market, we are entering into a very bullish stage. We've got the midterms coming up next week as well, and I feel like we are probably due medium to longer term to pop a little bit high here, at least up towards 11,600 where that 50-day EMA currently sits.